Gold prices moving with the euro inversely to the US dollar. David, sort of the fallout from that is that gold tends to move with stocks, which has many investors sort of looking at gold and saying it's now a risk asset instead of a safe haven. Do you agree with that?
No, I mean, gold prices have always moved inversely with the dollar over the longer term, although for good periods of time they can also move in tandem with the U.S. dollar, depending on what's going on in the world economic and or political environment. But over very short periods of time, it's very hard to measure the performance of gold prices relative to any individual stock index. In recent months, we've seen a big pullback in the gold price, where it's come back from $1,900 an ounce to 15 and a quarter, and then we've gone back up to the mid-1600s. I think that a lot of that is just largely to do with people's risk appetites in the market and not necessarily a reflection of changes in the industrial indices or the stock market relative to gold.
It just seems like now of all times, gold should be the ultimate safe haven, right? It should be at $2,000. So many difficulties in Europe. Greece still doesn't have its act together, and it's not. So what does that tell you about gold's safe haven status?
I think gold has played its safe haven status, Alex. I think that in the last couple of years, gold has been the best performing asset that we're aware of. It's outperformed the Dow Jones Industrial Average, most of the European indices, as well as been the best performing assets. It's hard to say that just because it hasn't performed as well in the last month that it's not performing that is historical hedge or safe haven protection.
So do you think that investors, though, who buy gold are in for a volatile ride in the first quarter? Is there really a catalyst that we're going to see to really push gold prices higher?
Oh, I think gold is going to be very volatile. In fact, if you look at what gold has done since mid-2010, we've seen a very substantial increase in the volatility of the gold price, partially reflecting what's going on in the global economic and political environment. And I think that trend is going to continue as well.
So what's the most recent catalyst that you can look at for higher gold prices in the next couple months?
Well, in the euro, the situation in Europe, as well as the concerns over the current status of the euro, are going to continue to stay in the forefront of investors' minds during the next quarter. But the significant increase in gold imports into China out of Hong Kong that we've seen in the last quarter as well is going to really raise the specter and the question in investors' minds as to how much the Chinese are increasing their foreign holdings of gold bullion, partially as diversification of their foreign exchange holdings. The more news that comes out on that, I think we're going to continue to see gold in the forefront, and it could become a very strong catalyst for gold prices going forward.
The biggest risk is the Eurozone situation because catalyst coming from China.